Rob, we had a positive close here in South Africa yesterday, also in the US last night, but that announcement coming through after the bell from the US Fed really seems to have put a bit of a scare into the markets that interest rates are on the rise from here.
Yeah, it was quite a surprise to markets around the world. People weren't expecting that until maybe late in the year. So quite aggressive from the Fed, and it's the first real move they've made in a year and a half. So it is quite interesting. I think the markets aren't scared. I think it's a good thing. It means that the markets are recovering. But obviously people have to worry about how much money will be going into emerging markets and markets around the world, and if the money's not going to come back into the States. So I think it is positive, but the markets just have to digest that news.
Of course, the Fed did say, or did point out, that this was not an interest rate that affects consumers, so it's not the regular US fund rate, it's the emergency lending rate that it lends out to banks at. And really it's trying to inspire more lending between the banks themselves, isn't it?
Yes, I think so. They want the banks to start lending and start to create liquidity in the system like it used to, and not having to get it just from the Fed discount window. So I think that is positive, and let's see if does that filter through. Is there liquidity, and are the banks prepared to start lending to each other again?
So really, Rob, this is a sign that markets are starting to normalize and to operate as they really should be.
Definitely, I think so. The numbers coming out of the States, their leading indicator was up. The recovery in the market in all of their divisions in the States is looking relatively good. Housing's still a little bit at bay, and it is definitely settling, and I think it is a start to say that the financial markets are slowly stabilizing and moving back to normality.
Of course, we are seeing here clear signs that the US is leading the European Union in this economic recovery. Interest rates likely to go up in the US before they do go up in Europe. We see growth much stronger at this point in the US than Europe. And that has implications for South Africa because, of course, Europe is one of our biggest, or is our biggest trading partner at this point.
Yes, it's fantastic that the States is starting to show that recovery, but obviously our biggest trading partner is the EU, and the EU is still under a lot of pressure, and I don't think we can see an interest rate hike from the EU just yet. If they do put an interest rate hike from the EU, it's going to be detrimental to South Africa and our exports as well. So I think that'll be quite interesting to see if they've got the capability to start tightening yet, or if they have to carry on the stimulus a little bit longer than in the US.
Well, we had those positive manufacturing data coming out of the US last night. We did have results coming out of Walmart, though, and they missed forecasts. So although we are seeing some traction in the US economy at this stage, we see that the US consumer is still a little under pressure.
Definitely, Walmart being the biggest retailer in the world, and obviously their numbers, they missed their targets, and still showing that the US consumer is under a lot of pressure. The recovery is definitely there, but it's the speed of the recovery that we're looking for, and that speed of the recovery looks like it's still going to be quite slow and a very long recovery, a very slow and long recovery rather than a very quick and steep one. So the consumer is still under pressure. We saw that from the jobless numbers that came out yesterday as well, that were weak in the States. And until the companies start hiring and that employment rate comes down, that'll be the real curse and the push that will get the recovery moving much quicker than it is currently.
Well, just looking at the local picture today, we had those results out from Anglo American this morning, of course, long anticipated results. Although a dividend wasn't really expected from Anglo at this stage, we see the share down sharply today. At one point it was down around 2% this morning, so quite a negative reaction from the market, although the results did actually come in slightly ahead of expectations.
The numbers look relatively solid. They look like they've cut a lot of costs off. They've saved about 700 million in costs, which is very positive. It's a 5% saving in costs, and that puts them in good stead going forward. I think that people were looking maybe at a dividend. They do say that they've agreed to sell a portion of Tarmac for $400 million, and I think because of that, a lot of the market to think that maybe there would be a token dividend. But I think it's prudent from Anglo's side to get that balance sheet healthy again. They're still under pressure. They've got $11 billion of debt currently and they still have to do the rights issue to Amplats. So they've still got a lot of headwinds on that balance sheet. I think it was prudent that they stayed away from a dividend.
Of course, they're selling that Tarmac stake for about $400 million. But at the same time, you mentioned Anglo Platinum. They're in there for about 10 billion rand, 11 billion rand. And they also are underwriting De Beers rights issue as well. And that's another $450 million. So quite a lot to come out of Anglo American, quite a lot for the company to digest in the next year. It did point out that we could see dividends coming out in the interim results. What do you think the likelihood is?
I think it's quite strong. I think that if the commodity prices stay where they are currently or firm up, Cynthia Carroll said that she's looking very positively that there could be restocking again from China. And so it is looking positive there. And I think that at the rate they've cut costs on their balance, cut costs in all of their operating facilities, I think there's a good chance that they'll have very good growth going forward in the year, and there will be a dividend.
Of course, we did have those results out from Kumba Iron Ore yesterday. Kumba Iron Ore really putting a positive spin on going forward, lifting production. So it really looks like this resumption in commodity exports is intact at this stage, doesn't it, Rob?
Yes, it's very firm. As again, Cynthia Carroll said that she doesn't see any problem in the medium term to long term with commodities, and that's very good going forward. We see China, even though that they are starting to tighten some of their stimulus packages and tightening on a lot of on lending. They're still growing at above 10%, and as long as they're growing at 10%, there's still going to be a commodity drive there, and they also have to restock inventories again sometime this year.
Rob, we had that announcement out of Pioneer today. Well, yesterday it had its AGM, said second half earnings are expected to beat last year's second half earnings. Also coming out with an announcement this morning, and that's that it's looking at more competition issues within the group, and that's in addition to the fine that it's already received from the Competition Commission for price fixing in its bread division.
Yes, I think that number was 196 million that they had to pay, and that was from the bread division. And now I see that in the milling division, they could have a complaint again. Looking at the numbers there, that division made about 1.8 billion in 2006, where the complaint has come from, and it looks like if they apply the same principles, it'll be about 110 million rand fine. So quite a hefty fine there coming again. But the numbers look very good from Pioneer, and I think that they've had a lot of deflation in the food price, and food price inflation now only at 1% compared to 16% a year or two ago. And I think going forward there will be slight food inflation again, and I think their earnings will be very positive going forward. They also increased their dividend by 35% to 89 cents, so they're looking very positive, and I think even if they do have a fine to pay of 110 million, it won't really affect the share price too much.